All right. Well, good morning, everybody. Thank you so much for joining us today for our coffee and Q&As with the insurance agent. I am Cheryl with Community Lending, and I have Kyle Albert here with Community Lending as well. He is my co-host for this.
How you doing?
We are both on the East Coast, and our branch is over in the Fort Myers area, but I am over in Davie, Fort Lauderdale area. Kyle, go ahead and introduce yourself and let them know where you're at.
So as Cheryl said, I'm Kyle Albert. I'm also with Community Lending. On the East Coast, I'm in the Port St. Lucie, Palm City area. Been doing this a little while here, and I'm very excited to ask Chris all of these fun questions about insurance that, and I think it will be really beneficial for all of us to have these answers to be able to provide to customers in the future.
Agreed. There's so many changes going on, and this is why we wanted to come and do this, with you, because there's a lot of questions you guys have, and we want you to be prepared. We want you to be able to prepare your buyers or your sellers on what to expect, not only with their sale and possibly their inspections on their home, but how to handle that. So Chris, why don't you introduce yourself? Chris is with the Trusted Insurance Brokers. I'm going to go ahead and unmute you. If you want to introduce, there you go.
Yes, I'm Chris. I'm with Trusted Insurance Brokers. We actually work with about 35 or more home insurance carriers in the state of Florida. And I'm actually based down here in South Florida, but I cover the entire state. We do everything from home insurance, car insurance, all personal lines to even business insurance. So if there's anything you guys ever need or any questions you guys ever have, you can definitely reach out. And been doing it 8 or 9 years now. So got a good grip on the Florida market, and we're also expanding into some other markets like Georgia and Texas as well pretty soon.
Awesome. Well, you came dressed to impress.
Yes.
I didn't get the memo for the black tie event. My bad.
So I thought that's what this was. Now I feel overdressed. It's okay. You guys can just be comfortable. I'll just sit in this for the entire event. No big deal.
Well, Chris, we did ask some questions to quite a few people, and these are Kyle and I get asked. And so we want to go ahead and ask you, and then we'll open it up for any questions or scenarios that anybody that is joining the call may have. So if you do have something in the middle of us speaking, feel free to put it in the chat box. Kyle will be monitoring that chat box real quick, and then we'll switch it over, and Kyle will also have some questions that he has been asked by his clients and his agents that they may want to know as well. So first things first, what are the different types of home insurance policies? How do you know which one would apply to you as a homeowner or as a buyer? How do you know which one you need?
Okay, so it's pretty simple. You either are going to be purchasing a home where you're responsible for insuring the entire building. And by that, I mean the roof and the exterior walls, as well as the inside. And if that's the case, then you're going to need what's called an HO3 or a standard home insurance policy. If you are going with something like a condo or an association that insures the exterior walls and the roof for you, then all you need and all you're responsible for is the interior of the house. Then all you're going to need to get a condo insurance policy, which is called an HO6. There are some stipulations around that depending on the carrier and so on, but that's the nuts and bolts of those two differences. But now if you're going on the investment route and you out or what have you, then you're going to need something that's on a DP form, which is a dwelling fire form, or an investment and landlord policy. Depending on, and we'll get into this I'm sure later, but depending on the way you're renting it will also determine what companies and what kind of form you need it. You can go into renters insurance policies. So if you are a landlord and you have a renter, they should get a renter's insurance policy, which is going to insure basically their belongings and some liability on their part for that house or for that unit.
So if somebody's purchasing an investment property, going to rent it out, do they need an HO3, or they would go, you said, with the different one, because then the renter would have interior content coverage for the renters?
Right. So they would go with the DP3 form. Is very similar to a standard home insurance policy form, with minor differences in that the DP3 form allows you to rent it out and have a renter in place, and it takes care of it more of as a landlord type of policy. So there are some things that are not covered by that on the standard home insurance policy cover as well. But depending on how thin, I guess, you want to make it, there's also something called a DP1, which is a very stripped down version of the DP3. And by that, I mean it excludes a ton of things. It's a very bare bones policy. So you're pretty much excluding your water coverage. There's all kinds of things in there that you got to be careful of when you're choosing these policies as an investor. But the two main ones that you're looking at as an investor, yeah.
Okay. And now, when we have buyers that go into contract, they obviously always get a home inspection, but not many agents or buyers know what type of home inspections to get. They think they just need a comprehensive. So what inspections are needed and why? Like, what would you recommend they get, and why would they need those?
Yeah, no, a lot of clients that I come into contact with, they don't understand what kind of inspections they're getting. They don't understand what the inspections do. So I go through that with them. But there's two different types of insurance inspections that you need to get when you're purchasing a home. You have your wind mitigation and you have your 4-point inspection. The wind mitigation inspection is purely there to save money. Your policy without that inspection is going to be astronomically high. That policy helps you bring it down if you get credits. If you don't get credits, then it stays astronomically high. It's just what it is. But let's start with the wind mitigation. The wind mitigation inspection is going to look at the how new the roof is, how the roof is held down to the walls of the home, how the there's plywood decking underneath the shingles or the tiles or the metal, whatever it is. There's plywood decking under there, so they're looking at how well that is tight, how that's nailed down into the trusses. So the stronger it's nailed down, the less likely it is to blow off in a storm and cause a claim. So they're looking at those three things, but then they're also going to look at hurricane protection. So and I'm not sure if we're getting into that a little bit later on or not. But the hurricane protection is a pretty sticky area. It's pretty much an all or nothing credit. So it's something to pay close attention to when you do that inspection, because depending on the area of where the house is, that credit can be very significant. The further or the closer to the coast you are with that, the bigger that credit's going to be. The further west away from the coast, I should say, the further away from the coast you are, the less and less that credit gets. But if you're looking at a home that's, east of I-95, that's going to be a very big credit. So that's something to pay attention to. That might be something that you can, as a realtor, you can go back and negotiate with the seller to have something added so that they get that full credit, because that'll help them in hurricane season, but two, it might help them close the deal and get a better rate on their insurance in order to close a loan. And then you have, sorry, I'm spaced out there. And then you have the 4-point inspection. The 4-point inspection is really, it's more of a qualifying or an eligibility type of inspection. They look at technically 4, but it's really 5 things. They look at the roof, the condition that the roof is in, how old the roof is, and how much life is left in that roof. They're going to look at the AC. Same thing, condition, age. They're going to look at the plumbing, what kind of plumbing it is, if there's any leaks, that sort of thing. And they're going to look at how long ago it was replaced. And then they're going to look at the electrical panel. And the electrical panel, there's a few different nuances with that, but the electrical panel is key because depending on the type of wiring that's in that electrical panel, depending on the age of the electrical panel, and depending on the manufacturer of the electrical panel. There are a few brands of electrical panels, and I've said electrical panel at least 10 times already. So it sounds weird, but there are a few brands of those panels that that are no longer really accepted by 90% of the insurance companies. There's a couple that'll still take some of them, but typically when you go with those routes, the rates can be pretty expensive. So you just got to be careful. You got to pay attention to what's on that. For instance, the electrical panels that are not necessarily taken anymore are the Federal Pacific, Stab Lock, which is Federal Pacific, Challenger, and I can't think of the other one off the top of my head right now. But there's about 3 or 4 of them that are just absolute no-goes with the majority of insurance companies. But there are still some, like I said, there's still some carriers that you can get a quote from, but the rates are more than likely going to be a lot higher than your standard. So the insurance companies look at these inspections to either give you a discount or determine whether or not you fit their mold for the policies that they want to give you. So it's not necessarily a pass or fail, but I guess in a sense it kind of is, because it's either going to pass for this company or it's going to fail you, and we're going to have to look at a different company that will accept certain things. So in terms of the plumbing, you know, polybutylene, galvanized plumbing, those are some that pop up that you go, you know, whoa, hold on, we got to stop, you know, whatever quote we just gave you, we got to double check and make sure that they're okay with that. And if they're not, we got to kind of reroute and figure out what company is going to take it and how we can make it work.
It's interesting you mentioned that, because I did have a client who was buying a home and the inspection came back saying that the panel was not good, and it was brand new, but they got the wrong panel. So it just, you know, spent the money on that, and it was the complete wrong one that they couldn't get insurance. I believe they ended up backing out, or something happened that they just weren't coming to terms and they didn't want to do that. So that's interesting that you mentioned that. So when they get these inspections, they get the comprehensive, they get the 4-point, they get the wind mitigation. How long are these inspections good for?
The wind mitigation is actually good for 5 years. And actually, before we even get into that real quick, I want a quick note. A lot of people think that the wind mitigation or the 4-point inspection are a $400 or $500 inspection. It's not. They're together, combined, they're probably $150. Individually, you're probably looking at, depending on the area, anywhere from $75 to $100. So a lot of customers that come to me, they're like, "Oh, I need that wind mitigation, but isn't that like $500?" I'm like, "No. That was the full home inspection, which I never want to see. I don't want the full home inspection as an insurance agent. Any insurance agent, don't send the full home inspection to them. If they forward that on to the company, then you're in a whole heap of messes because of all the nooks and crannies that inspection entails. So only the wind mitigate 5 years. So for $75, if that's all you're getting, $85, even $100 over the course of 5 years, it's well worth it to get. The 4-point inspection, it depends on the carrier. Some companies will go up to 3 years. Most of them, for some reason, only want it for about a year. They say it's only valid for about a year. So I would always send those inspections over to your insurance agent, even if it's outdated, and just let them know, hey, this is what has changed since that inspection. So at least they can get an idea to quote and have a better starting point of, okay, well, if we know that this is here and this hasn't changed, then we know what companies that we can or can't go to.
Okay. We do have the chat box. So we have Stacy asking, is it more expensive to have, or how much more expensive is it when you have a pool if you rent out that home? So does the pool have anything to do with it?
Yeah. The majority of companies, it factors into the dwelling coverage amount. So it's not like a separate endorsement onto the policy or separate coverage. It's actually built in, or it should be built into that dwelling amount. So the way we do it is we actually run a replacement cost estimator, and we have to put that pool and roughly the size of that pool from in the property appraiser or what have you, or by whatever the customer tells us. We have to factor that pool into the replacement cost estimator in order to make sure that it gets covered as well, because it technically, per the insurance forms, it is part of the dwelling. So it has an direct way of affecting the premium by increasing that coverage amount which technically goes down the line and affects some of the other coverages as well. But that's really where that pricing comes from. So it's not a tremendous increase, because I mean, typically your pools are only going to increase the coverage by about 20 to 30,000. I mean, on a standard pool. So it doesn't really affect it too much, but there is a little bit of factor in there for sure.
So the effect, okay, it changes the dwelling coverage, but what about from a liability standpoint? Ruth and Stacy both have this question. Is the landlord have a greater liability with the pool?
Yeah, well, any homeowner with a pool is going to have a greater liability from the fact that anybody can just come on property and jump in the pool and drown. You know, that's the risk that's there. The bigger factors that go into pools, excuse me, as far as liability goes, is if there's like a pool slide or a diving board. Those are most companies. I'm talking probably 9 out of 10 companies don't even allow them. So if you have that, then you're probably looking at not getting covered at all. But the pool is just a liability from the fact that anybody, if you're not home or if you're away on vacation at night and somebody jumps your fence or comes on property, God forbid you don't have a fence, they come on property, fall in the pool and drown, there's a liability aspect. Your policy does cover you for liability, and there are certain restrictions when you have a pool that the insurance company wants to make sure of. Again, no slide, no diving board. They want to make sure that the proper completely fenced in with a 4-foot fence with a locking latch, self-locking latch, or covered by that bird cage screen enclosure. You know, if the property is fenced in or you have a bird cage over it, then typically you're more or less protected. There's no extra liability in a sense. There's no increase from that standpoint in your policy premium. It just has to do with, they got to make sure that the property is protected, because they are giving liability on these policies in most cases. When you're talking landlord policies, there are certain situations where if you have, if the landlord is buying the house in the name of a LLC, some of those policies do not include liability coverage. So the landlord will definitely want to get a separate policy, which is a commercial liability policy for that property to cover that for liability.
Wow. I didn't know any of that. That's interesting. Well, there goes my slide. Yeah, there goes my exotic pool slide and everything that I plan on doing.
There are companies that will do it, but it's, you gotta, that takes a little bit of search, and that takes a little bit of creativity.
Yeah, pools are very common in Florida. So, I mean, it's just got to double check their policy, make sure they have the proper liability, make sure you have the proper security latches and all of that. Let's go back to the inspections. Ruth had a question, and she asked, how old does the house have to be to require a 4-point inspection?
Request them as the insurance agent, regardless of what company we're going with. I always request them when the home reaches 30 years old. Most companies, a lot of companies, I should say, not most, but a lot of companies are requiring them at 30. A lot of other companies are requiring them at 40 years old. I require them as the insurance agent to make sure that I'm doing my due diligence to make sure that there isn't any other issues down the line that I can help foresee. So yeah, typically I would say 30 years old, even 28, right around 30 years old if it gets at home, because again, the inspection's only another $100, maybe, it might be less than that. So it's definitely worth it to have that that protection going in. For instance, I had a house that was this is actually even younger than 30 years. I had a house that was built in 2005. Guy was buying the house. He gave me the wind mitigation, which was technically all that was required. We bound the policy, and after every time you bind a policy, when the policy gets bound, the insurance company, their inspection company, a third-party inspection company, out to the property to, at the very least, do an exterior inspection of the home to make sure that there's everything that we put on the application lines up. They want to make sure there's no cracks in the walls, broken windows, missing shingles, or broken roof tiles, or any kind of nuance when I was writing the policy. So for this particular policy, house was built in 2005, shingle roof. We bound it. The insurance company went out there and found that the back of the roof was patched in a bunch of different areas. And that's a big no-no. Whenever there's several patchwork or repairs on the roof, even though it's certified by a roofer or what have you, they don't want it because that just shows that the roof is deteriorating and little by little something's going wrong. So they don't want anything to do with it. Wind mitigation inspection doesn't take photos from up high to show the condition of the actual roof. It's not there for that. It's there to show how the roof was connected, what condition as far as the tie downs and how well the roof was put together when it was put together. It doesn't look at the current condition of the roof. Being that it was 2005, it was about 15 years old, so I didn't think anything of it. And it turns out that there's a bunch of patchwork on the back, and they ended up canceling. This guy now needs to get an entirely new roof in order to get insurance, because even Citizens, the state fund, will not even insure it with patchwork that was there. So
yeah, that just actually put us into our next question, the expiration dates of each type of roof.
So in Florida, our sun is a lot harsher, beats down a lot harder on roofs than most any other places. So and it's even lately, a lot of these changes are coming where companies are starting to roll back these numbers a little bit slowly. So currently, the majority of companies will take a shingle roof, which is either a 3-tab or, I guess we could say it's 3-tab shingle roof. They'll take that up to 15 years, majority of them. There's a couple that'll go up to 20, maybe 1 or 2. When I say a couple, literally 1 or 2. Outside of that, then you have architectural shingle roof. Okay, the architectural shingle roof is basically those shingles that normally lay side by side, kind of like a brick. That's the composition shingle. Architectural shingle, they overlap, and they're kind of different sizes when they go around. So it looks like a 3-dimensional shingle. That roof lasts a little bit longer. Most companies will go up to 20 years on that. Some will go a little bit over, depending on the carrier, depending on how we write it. But majority just basically plan for 20 years on that. Tile roofs have depending on the company, they have a lot more wiggle room. So tile roofs, barrel tiles, concrete tiles, those go anywhere from 25 to 40 years old. I actually have one company that doesn't care how old it is as long as it's in good condition. So tile roofs are a lot stronger, last a lot longer. We're not so worried about those for the most part. Metal roofs, same thing, anywhere from 25 to 40 years or more, depending on the carrier.
We have a couple questions. So Gabriel says that he's seen that there are different insurance companies, each offering coverages at their own rates and excluding certain issues. So what is the difference between a standard insurance company and a surplus line insurance company? And
Great
when
question.
should they use the surplus?
1 second. So the standard insurance companies are actually backed. We call them, on our side, we call them admitted carriers. And admitted carriers admitted to the state of Florida. They are backed by the state of Florida. So if you're in the middle of a claim with an admitted carrier and that carrier goes bankrupt, goes belly up, the state of Florida will actually step in and I believe it's either up to $250,000 or $300,000 for your claim. So if you're in the middle of a claim and that company disappears on you, the state of Florida backs you up and they will cover your claim up to that number. An excess and surplus carrier is not admitted by the state. They're not as strictly to the state's rules in the sense that they kind of can do their own thing when it comes to rates. And they technically have a lot more flexibility in that sense to write certain things that standard companies won't. For instance, if you have a shingle roof that's 26 years old, as long as it's in good condition, you can go with an excess surplus carrier because they'll take it typically up to 35 years old. So there's different nuances with that, but the biggest thing that I caution anybody with when it comes to the excess and surplus companies is one, the quality of that company. If you're talking a Lloyd's product, those are really big products. Lloyd's of London is a huge company. They have a million different syndicates, but you can feel a little bit safer knowing you're with a Lloyd's company because they are a very strong product, very strong company. So just know the kind of company that you're going into. It's not just some Joe Schmo E&S company that popped up out of nowhere. But the bigger thing that I pay attention to is the majority of those companies actually have what's called a minimum earned premium on their policies. So what that means is when you pay that premium, or I'm sorry, when you bind the policy, the customer is responsible for 25% of that premium. The carrier is going to keep 25% of that premium no matter what. If they cancel 2 days later because they found a better rate in another market, doesn't matter. They're keeping 25% and they'll refund the rest. Taxes and fees are 100% earned. So out of the base premium minus the taxes and fees, 25% of that money is fully earned by the carrier. So you just got to be careful with that. If you are going to cancel, you can. You just want to eat up that 25% by using the policy for 25% of the year. And then once that passes, then you can cancel and you'll get a standard refund like anybody else. But if you try to cancel before that 25% time, you're losing money, basically. So you just got to be careful with that. But I hope that answered the question.
Yeah, I remember we had a situation like that, and we had to explain to the client exactly how that carrier worked, because that was, a bit. So Deanna has a question. If you own an investment property and your lease specifically states no pets, but the owner, because we know most people will sneak their pets in anyways, if their pet bites somebody, is the liability coverage responsible to pay that claim?
That's a tricky one. So insurance companies, it's not so much about the lease agreement. It's more about the insurance company, what the insurance company will accept. Insurance companies will accept certain dog breeds. They'll allow them. But on most of your policies, if you read the print, even on the application, it's usually listed on the application. The customer has to sign off on it. It states that animal liability is excluded from the policy. So it's wise for the customer to get a animal liability policy separate for two reasons, or at least one big reason. One, that gives you the coverage on the policy, or that gives you coverage for animal liability if the animal bites anybody. But two, it keeps it keeps it separate from your home insurance policy. So if you ever need to make a claim, you're not making a claim on your home insurance policy, you're making a claim on the animal liability policy. So that kind of saves you in the long run. But typically, no, it's not covered by your home insurance policy because they do exclude it. But I will say that lawyers are tricky and they find loopholes. And that's part of the problem with the whole animal liability side of things when it comes to carriers. Some carriers will absolutely not allow any of the quote unquote vicious breeds like your pit bulls, your German shepherds, and so on. Other companies will accept it. But it's one of those things where you want to have, if you want that coverage, if you want to make sure that you're covered for an incident like that, regardless of the type of dog you have, animal liability policy is a standalone policy. You can get it. You can call me and ask me for it, or you can call your agent. Hopefully they have the market for it. But there are policies specifically for animal liability, regardless of the animal type, or the dog type, I should say, to cover that. But typically, no, your home insurance policy doesn't cover it.
Okay, so, and then that answers Deanna's question. Yes, he does write animal liability policies, right? Yep. Yeah. Okay. So we're gonna move to we have to go back to the roof question. If the roof has 0 years lifespan remaining and the seller is giving a credit to the buyer at closing for replacement, what options do they have to provide insurance, understanding that the buyer will replace the roof within the first 90 days?
So,
because I think those all changed, didn't it?
Well, it got trickier. It's getting harder because they're coming down from these carriers now. So, typically, if the roof needs to be replaced, if there's no life expectancy left in the roof, and the seller is giving a credit to the buyer to replace the roof, per insurance standards, has to be replaced within the first 30 days. As far as the rate for that policy, Insurance agent, we're required to rate the home the way that it is now. Hang on one second. Sorry, I've been fighting that. We're required to rate the home and quote the house the way that it is now. So that could be a little tricky in the sense that the roof is too old. It's up the phone, talking to the underwriters, tugging on the heartstrings a little bit, and getting them to work with us. As long as your agent or whoever you're working with maintains a good relationship with the underwriter, it should be able to get worked out and have a policy. You just might have a higher premium at the closing, which will go down later once the roof is replaced. Because the fact that once they replace the roof, it's I tell them to go ahead and get a brand new wind mitigation inspection done, or have the inspector come back out and re-inspect it for them on that policy, because then that credit will decrease the premium, being that they have a new roof now.
Okay.
But 30 days is really the window. You got to be careful with that. You don't want to push it beyond 30 days because the carriers will not allow that policy to continue if it goes beyond that.
Yeah, and I think down here it's a little difficult to get it done in 30 days, just like Ruth is saying. You know, the permitting, and then roofers are busy, so that could potentially be an issue. So when listing a home, maybe that's something to have that conversation with the seller about when it comes to the age of the roof and things like that, just to give them the correct expectations.
Right. But if you are in the middle of that situation, just be in constant contact with the insurance agent to let them know what's going on, what step you're at, and that way they can communicate to the carrier and be like, hey, this is what we're waiting on. There's a holdup on the permit, whatever it is. Again, if you have a good relationship with your underwriter, with the insurance agent has a good relationship with the underwriter, they'll work with us. It's in most cases, but it is getting a little bit tougher down here right now. So you got to be more careful when you approach homes that need that, like she's saying, to kind of maybe get that done ahead of time. Have the seller just go ahead and do it, or whatever you got to work out in the contract.
Yeah, that's tough. Not a lot of sellers want to do that. So then technically it's not just the roof, the age of the roof. It could be the age of the home that has an effect on your policy as well.
Correct. Yeah. A lot of companies, majority of them now, are changing their restrictions to only allow homes that were built in 2010 or newer. Olympus is one of them. They just did that for the entire state. Actually, it's not even just down here. They just said, you know what, the entire state has to be 2010 or newer, which puts a lot of stress on me as the insurance agent trying to find a policy for these clients in the South Florida area. I know Federated, was it Monarch National, 2010 or newer. But it's not just the age of the home. I don't know if I'm bleeding into another question right now, but it's age of home, and it's also the coverage amount on the house. So the coverage amount has a big effect on those policies now as well. So if the house isn't, let's say, large enough to be able to be insured for X amount of dollars, so let's say $250,000 on the dwelling coverage, or $500,000 in most cases now, don't want anything less than $500,000, or they don't want anything less than $250,000. So there's only a handful of carriers, and I should say less than a handful of carriers, that are able to insure under those numbers. Excuse me.
So now there's still a lot of homes here in South Florida. There used to be a carrier that would still allow the coverage for that. Is that still the case, or is that going to be kind of a problem, or would that go into that surplus area?
It's always been a problem because there's not many companies that allow it. Maybe one or two that'll take it. A lot of companies now, or I don't want to say a lot of companies, there are a couple companies that I think will allow the policy, but they're going to exclude water damage coverage. So there's like a give and a take in some areas. But there is like one or two companies that will take poly pipes. But again, when you're only dealing with one or two companies that'll allow something, your rates are going to more than likely be a lot higher than what they would be without it. I had a customer that had polybutylene pipes, actually. Yeah, polybutylene pipes. And her rate was about $700 or more a year than if she were to have the entire house replumbed. And she just took the $700 more a year because to have the house replumbed was a lot more expensive. But that was actually up in Orlando, so it was a little bit different. Down here, it's going to be a little bit different, but you know, the premium might be a lot higher than just $700 compared to the other carrier. Take it if there wasn't.
So I'm gonna wrap up my questions. I believe Kyle has some. So the last question we have is hurricane protection credits. What are the qualifications for that? And I know that there's some update requirements too, and what updates could be done. So I guess that's two separate questions. So let's start with the hurricane protection credit.
So the hurricane protection credit is an all or nothing credit. Every single opening into the home, every window, every door that goes into the home needs to either be impact rated and wind resistance rated by Miami-Dade or the other qualifying companies, or it has to be covered or protected by a device that is wind and impact rated. So like I said, it's an all or nothing credit. There's only one or two, maybe three companies that will allow certain nuances with that. In that most of the time what we see is, you know, all the windows will have hurricane shutters or they'll be impact windows. But the front door, which is a solid front door, no window, will not be hurricane rated, or they can't find the hurricane rating on it. That takes you down a tier. Most companies don't accept that. There are a couple companies that will still give you the credit for it. Same thing with the garage door. If they can't find the, notice of acceptance stating that the garage door is impact and wind rated, then, but it appears to be impact and wind rated, then they'll go down a tier and they'll give you what's called the A3 credit, which is only accepted by a handful of companies. So you just kind of got to look at it and go around. Don't just look in the garage and see if there's shutters there. You know, as you're walking around the house with the customer or whatever you're doing, look at each window, look at each door, and ask the seller, is there, you know, hurricane panels for this? Are they rated hurricane panels? You know, and what about the garage door? Is that rated as well? What's the deal with that? Just to be on the safe side. But sometimes there's, you know, windows on the garage door. And if there are windows, those windows have to be impact rated and wind rated, as well as the door, in order to qualify for that credit as well. So that could be something that jeopardizes that credit altogether. Most companies, it's all or nothing. Every window, every door has to be protected. Some companies will give you a little bit of leniency depending on the situation, but definitely something to ask for or ask about when you're walking around, when you're talking to the seller.
Wow. And then what about the updates? So are updates a requirement? And if so, like, what are the required updates to get homeowners insurance?
What updates as far as?
I think we kind of went over it at the beginning when it had to do with the AC or the water heater, the electrical panel, things like that.
Right. Yeah. Pretty much right now, a lot of the companies, especially in South Florida, they're wanting updates on all the major systems within 20 years. So your AC unit needs to be, I mean, realistically, your AC unit should be updated if it's 20 years old anyway.
I don't think I've ever seen an AC unit last 20 years.
Yeah, exactly. So your AC unit, your electrical panel, even, they're getting kind of strict on that, which I'll be honest with you, I think is a little bit of nonsense. But it is what it is. It's they make that call. I can't change that. But the electrical panel being updated in the last 20 years, the AC, the water heater is a big one. A lot of times I'll see people buying houses with, a 15-year-old water heater. Water heaters typically only last about 10 to 12 years. So if you have a 15-year-old water heater in that house, that might be something to negotiate into either getting a credit or having them replaced before closing. And those typically aren't too expensive anyway, but water heaters and, those three are the main ones. The plumbing, depending on the age of the home, the plumbing might need to be updated as well. I mean, you have not just polybutylene, like I mentioned before, and not just galvanized, but you also have cast iron in houses that, the older homes. Cast iron with a lot of companies is a no-go too. So having that part, having that kind of fixed or updated will help in getting, decent rates.
Okay. Kyle, you had a list of some questions, so why don't you go ahead and take over?
Alrighty then. So it sounds like there's a lot of companies that, don't use certain or don't want certain things in homes, older electrical panels, some don't want different plumbing. And there's going to be a lot of different carriers who have different things that they will allow. In the Tri-County area, though, how many carriers do we have to choose from? I mean, is there five or do we have like 50? And,
Well, if you would ask me that about a year and a half ago, I would have told you there's about 43, 45 companies that we could write with. Over the last year and a half, that number has significantly dwindled down. And again, it all depends on the age of the home and everything. But if you're not talking newer construction, 2010 or newer, you're pretty much looking at maybe 3 or 4 companies, maybe 5 maximum, as far as the admitted carriers go, that'll actually write business in the area. And that's strictly, obviously each one has their nuances, has their restrictions, but it's kind of like a process of elimination on my end, right? Once I see the house is in Tri-County, I go, okay, how old is the house now? We look at how old that house is. If the house is older than, 1980, then that number goes from here to here quick, so it's from there, then we look at, okay, what's the dwelling coverage amount going to be? How big is the house? How much can I insure this house for? And a lot of times lately, just to get a decent rate, I don't want to say over-insuring, but we've had to bump up the coverage a little bit just to get them into that tier where they can get another carrier to rate so we can get maybe a better rate. It's not dramatic. Obviously, I can't take a $200,000, reconstruction value and say, oh yeah, no, 300,000 easy. I can't do that. If I run the replacement cost estimator and it tells me 200,000, then we're stuck at that $200,000 range. If it tells me 230, I might be able to swing 250. It's not hard to bump that up. And likewise. So it's just, once we see how old the house is, then it kind of determines, okay, it's this old, it's in this area. Now what are the options? And we kind of just have to play that game. It's a puzzle. It's a constant puzzle. So I would say, to answer your question bluntly, probably anywhere from 3 to 5 companies in the admitted markets that we could write with.
Okay, we got another question from Ruth here. She asked, do you routinely prepare a replacement cost estimator for your clients? And how do you prepare it without seeing the interior and any upgrades?
A lot of that is questions I ask the customer. I prefer to speak to the customer. They know the home obviously better than I do. Even the realtor will know the house better than I will. But I'll use different resources. If it's an already constructed home, the property appraiser has a decent gist of what's going on for the house. If it's listed on the MLS or if it's on the market, I can pull up Zillow and Realtor.com, and if there's a decent amount of photos, I can get an idea for, okay, there's tile flooring or there's carpet flooring or there's laminate or hardwood, whatever's going on in that house. So that's the information really that I need. Each carrier has their own replacement cost estimator that we have to go in and do. To start a quote without most information, I usually use a rule of thumb with the square footage, and I usually add $20,000 to $30,000 on top of that just to have a little bit of wiggle room. But once we get into the nitty gritty of it, then I'll if I get on the phone with the customer, if I speak to the real estate agent, then I get all the details that I possibly can so that I can put that together the right way the first time instead of just kind of a guessing game. So yeah, I mean, the details of, tile flooring, what kind of countertops, what kind of cabinets, those kinds of details are kind of the main core of it all. And using that information, I plug it into each carrier system, and they give me a roundabout number, and I kind of go with a solid number based on those figures.
Okay, awesome. So another question I hear a lot, and this is perfect for you since you do a little bit of everything, is, well, why would I choose anybody else for insurance? I have Progressive, they have my home, they have my auto already. Why don't I just go with them, for my home policy? Is there a benefit to using you? Do you also give, benefits for bundling, auto,
Right.
flood, home?
Yeah. So, so it depends on the company that they're with. So for instance, I also write with Progressive, and Progressive has actually bought out one of the home carriers, which is American Strategic, or ASI. And that's how they are writing home insurance now, and they are bundling. So yeah, if AS, again, it comes down to really what, if the house fits that mold for that that carrier. There's only a handful. I mean, there's less than a handful. There's maybe one or two companies that are doing a true bundle right now in the independent side of things, which would be Progressive and ASI. And then there's AAA, which I also have, that I can write with. So those are the only ones that are really doing a true bundle. But the benefit really then, I mean, I hear everybody talking about Geico and how they can get home insurance from Geico and this and that. And I chuckle at it only because you're the type of agent you're dealing with when you call an 800 number like Geico is not the kind of customer your agent you're gonna get when you go through an agency like mine. You know, I can speak for myself. I care about each and every one of my clients that I come across. I make sure that I'm doing the due diligence on every single one of them. So I'm looking out for their best interest. When you call into Geico, you're getting somebody different every single time. You're not getting that same agent. So that service there is a little different. But not only that, when you're calling a company like Geico, they only have one or two companies that they're shopping you through. And typically their rates are a lot higher because of the companies that they're partnered with. Whereas, you know, I have an abundance of options that I can shop through. So I'm constantly looking for the best rate, not just, you know, getting the deal now and disappearing and never hearing from me again.
All right. So you're saying using a local guy who's trying to build up his clientele, and that some, you know, giant company is going to get better service.
Right. And I mean, and if the bundle is there are opportunities where the bundling is there, but on your auto insurance policy, if you are a homeowner, you get a discount on your auto insurance for being a homeowner. So, I mean, we kind of bundle. I mean, there's really no true bundle anymore other than those two companies that I listed, you know, so it's just, it's hard to find that true bundle, I guess you could say.
Okay. Now, I get this question a lot. I'm sure Cheryl does. Anyone who originates does. You do. When you get homeowners insurance, is any flood protection included at all?
On your home insurance policy, no. When you're talking flood, flood insurance is commonly misunderstood. They think, oh, if my home floods, then I should be covered. Well, in a sense, yes, but in a sense, no. So depending on how it floods, right? If a flood is defined by water rising outside the home and flowing into the home, right? So if water rises outside the home during a storm, or if you're closer to the water and there's a tidal surge and water rises and flows into your house, that's not covered by your home insurance policy. That would be a separate policy, which would be just for flood insurance. Now, on the flip side, if your plumbing pipe bursts and quote unquote floods the inside of the house, that is something that should be covered by your home insurance policy, as long as it's not being already excluded from your policy. For any water damage exclusions or anything like that would nullify all of that. But if it's just a standard home insurance policy that covers covers water damage, a pipe burst will be covered by your home insurance policy. But any water from the outside of the home coming into the home would need a separate flood insurance policy.
So if you had a faulty roof, you know, shingle got taken off in a storm or something like that, and have water coming in, you don't need flood insurance for that, do you?
No, that's covered by your home insurance policy in most cases, again, pending any exclusions, but that's covered by your home insurance policy for water damage. And depending on how it occurs is another factor. You know, if it's, let's say, a hurricane that causes the damage, they'll tier it differently. So if a hurricane causes damage to the roof and subsequently rain is coming in from the hurricane and causes water, you know, damage inside the house, then that's actually a hurricane claim. Whereas if it's just raining outside and your roof starts leaking, that's a water claim. The one thing you don't want as a homeowner, especially in South Florida, or realistically Florida in general, you don't want water claims. So you want to avoid that as much as possible. I always advise everybody to get some estimates, see how much it's going to cost to fix, and if it's feasible, fix it on your own before you call the insurance company. If it's ridiculous, it's going to cost too much, then obviously make a claim. But going back to it, that a roof leak, depending on what causes it, is covered by the home insurance.
Okay. Now, for each customer that you write a policy for, do you check to see if they're in a flood zone?
Yes, majority of the time. So a lot of times what I'll do is I'll communicate with you, the lender, because most of the time you'll already have done that flood determination, to see what it is. And if you have it, then I go ahead and look it up. There's a lot of different ways that anybody can really look up if it's in a flood zone. You can go to the FEMA website. I usually, depending on what county the house is located in, I either have it saved on my computer or I'll Google, let's say, Broward interactive flood map. And usually one of the first links that pops up is an interactive map for that county where you can just type in the address. And as you're typing in the address should pop up and you can click it. It'll find that house and it'll tell you what zone that house is in. The high risk flood zones are going to be anything other than a B, C, or an X. The B, C, and X zones are low flood zones. So if you see A, AO, AH, anything like that, that lets you know that you're gonna need to get flood insurance on that property.
Okay. And all right, this is kind of a two-part question. So if you're not, let's say you're in flood zone X, it's pretty much a low risk flood zone.
Right.
Should you get flood insurance? And is there a maximum amount of cover or flood insurance coverage you should get?
Yeah. So I recommend getting flood insurance if you're in a low risk zone, because realistically, Florida is separated by high risk and low risk. Regardless, you're still in a risk, for flood. So regardless, if you're in a low risk zone, the insurance on that with maximum coverage, you're talking right around $450 to $480 a year, and that's with the maximum coverage. You don't necessarily always need the maximum coverage. So with the standard NFIP policies, which is the National Flood Insurance Program, the maximum coverage is $250,000 for the dwelling and $100,000 for contents, and that includes a $1,250 deductible for each of those. And your total premium for the year is $480. So it's well worth it. So cheap that it's one of those things. Better to have it, not need it, than to need it, and not have it, in my opinion.
Okay. And I know when I was getting my policy with you, one of the questions before we even started was, hey, how's your credit? And when you get these policies, do you pull credit for customers? Is it like going to a car dealer, or is it something like we do where we really do a deep dive in your credit? Maybe there's a foreclosure, bankruptcy, short sale. Does that affect your chances on your rates or anything like that?
Yeah, so a lot of carriers are switching to that model of credit inquiries, but it's not a hard inquiry at all. It doesn't affect the credit score for the client. It's really just a look into it. They call it more of an insurance score than an actual credit check, but credit check is part of it. So, yeah, I mean, it doesn't affect the credit, and I usually will discuss it with the customer just to let them know, because if they do check their credit, they'll see that this company pulled, this company, did a soft inquiry, and I don't want them getting freaked out by that. So I let them know, hey, these companies do this. Is it okay with you that I do this before I go ahead and do it? I just want you to know it doesn't affect your credit, and so on. And most of the time they're like, yeah, go ahead and do it. And that way we can get the most accurate rate possible ahead of time versus getting blindsided by it later.
Okay. And one of my final questions is, how can people save money each year on their insurance? Every year it seems like there's always an adjustment for this part of my policy or that part of my policy, and my rate goes up, or maybe just stays the same and maybe goes down next year. It's always kind of fluctuating.
Yeah.
What can we do to maybe lower it each year or make sure it doesn't drastically increase?
Definitely, yeah. There's a couple of things that help. Obviously, if there's the age of the customer is one. There is a senior discount for anybody over 55, I believe it is, or 52. It might be, actually. Some companies vary a little bit, but they do give senior discounts. But that's automatically calculated from the minute we get you know, the date of birth for that customer. So that'll automatically be built in there if they qualify. The other thing that they can do is an alarm system. If you get monitored for burglar and for fire, that's a pretty big discount in most companies. I wouldn't suggest doing the alarm discount or doing the alarm just for the discount. Do it because you want it. The discount's kind of a bonus, but that is one feature. So if you do have an alarm and you didn't tell your insurance company about it, submit that alarm certificate in, and they should hopefully give you a discount on that, depending on certain situations, but most of the time you'll get a discount. And then, I mean, realistically, year after year, your policy is going to increase. And there's a couple different reasons why. It could be because the rates, it could be just because the company went and got a rate increase. And if that's the sole reason that the rate went up, then you're better off just reshopping. But a lot of times what happens is your coverage increases year after year because it has to keep up with the cost of construction. You know, the cost of construction is always changing. So year after year, your rate will increase mostly because your coverage increased. So if you can go back to your agent and say, hey, I know the coverage went up a little bit. Can we bring that back down? See if that saves me any of the money there, and that might help protect that. A lot of people don't think to do that, so it's definitely something worth looking at when you get your renewal in the mail.
Final question, and probably one of the most important ones of the day. How can you be reached? How can we use you for your services?
Yes, well, easily by email. You can reach me at chris@tibfl.com. That's Chris at trustedinsurancebrokersfl.com. So it's tibfl.com. Or you can call me, either call or text me at 561-889-5360. Again, 561-889-5360. I think Cheryl's putting it in the box there. So yeah, thanks, Cheryl. If you guys need anything, if you have any questions, even happy to help. You know, even if it's not me that you're going through for the insurance or whatever. If you just have a situation that you stumble upon, feel free to reach out and let me know what's going on, and I'll help you any best way I can.
Chris, I don't know if you mentioned, because I was receiving a call, but when it comes to the credit, did you go over about if someone has a bankruptcy and how that can affect their?
Yeah, bankruptcies and short sales and foreclosures are big no-nos with most companies, depending on how long it's been. Some companies specifically ask, and those are the ones that really care. Other companies don't ask, so most of the time we can get by with that. But if there has been typically a bankruptcy or a foreclosure in the last, I'd say 3 years, then we definitely need to know that ahead of time so that we can make sure that we don't waste time quoting with a company that's just going to deny it at the end. Get our hopes up for a good rate and then have to deal with something higher. For sure.
Awesome. Did anyone else have any questions that they want to put into the chat box or have a scenario you'd like to ask Chris? We'll give it a second and you guys can type that in or raise your hand and we'll give it a second. But Stacy says great information. The name of his company, Ruth, is Trusted Insurance Brokers. And you can find him on Facebook as well. Oops, I think I said that
with
right.
A lot of funny content that he posts.
Yeah, those are his children.
I like the cheer the other night. That was good.
Hey, I got 4 daughters, okay? Don't judge me.
Yeah. All right, well, I don't see any other questions, so we will go ahead and give you guys some time back in your day. Angela says, thank you so much. It was great information. Christine, thank you for joining. She says, great information. So yeah, we really appreciate you joining us today and going through all that. There's so much I didn't even know once you broke it all down. I was like, wow, okay, well, I'm not getting a slide now to my pool. And yep, Ruth says, great webinar. Gabriel, thank you. So guys, I did put his information into the chat, so feel free to take a minute and go through that if you have any questions, or you can reach out to Kyle or myself, and we will get that information over to you. So yeah, everybody, I hope you guys have a great day. Thank you so much for joining. Thanks, Kyle, for joining and asking those questions. Chris, thank you so much.
Awesome, guys. Thank you.
Thank you.